Hey, welcome to the show, everybody.
All right. 27th of October.
It's Halloween almost.
We are at the sweet spot. Seasonality would suggest that the market should do well for the next couple of months.
Says the Wizard of Omaha, or Wizard of Leesburg.
Yeah, no. I don't make this stuff up. I do not make this stuff up, but we got to say, actually, it's the same seasonality chart we showed last week, but just to kind of reconfirm, it's that this is the time when the market's supposed to go ripping higher. Now, it's been going higher.
Yeah. What's higher look like?
I keep waiting for Larry Williams to come out. I'm sure he's going to do it after the fact, because that's what everybody does. But
I told you so.
Yeah. Well, everybody says that. Well, he says that those seasonality kinds of charts are really more of a timing than, like, the market goes up during certain months and comes down during. So it's supposed to come down in September, October, right? We didn't get that. That's okay. JC would say that's a sign of strength in the market, right?
Yeah.
So it's more about the timing. So we're going to talk about it, but like, why does the market go up in November and December? We're past earnings period, and so companies can start buying back their own shares. So it's called buybacks. That puts a lot more money into the market. Again, just like last year, this year you got a lot of fund managers that are not meeting their marks for 24, because if you weren't in the Magnificent Seven again and some other sectors, you're probably not beating the S&P 500 this year. So to catch up, they put money in at the end of the year. So there's all kinds of reasons, and we have huge budget deficits and everything else, tons of liquidity. It's very hard for the market to go down when there's so much liquidity going in for so many different reasons. So we'll talk about some of them, but it's interesting. It's definitely the time of the year that the bias should be on an expectation that the market goes up, not down, as opposed to like September, where the bias would be, you're on the edge of your seat waiting to sell. Right now, you're on the edge of your seat waiting to buy. Yeah. If you're not already in. All right. So we'll talk about what happened this week. I don't know if we talked about this I think we did a while ago, but it came up again on the Facebook group, so we'll kind of dispel a myth. And then what actually is driving the market's like neurotic. It should be going down for a lot of reasons. It should be going up for a lot of reasons, and we'll just take a look at what those reasons are and try to balance it out in the TSP fund charts. So Monday, we got the Conference Board Leading Economic Index. This has been something that's been confounding analysts for a while here. The index continues to fall, right? It was down 0.5% month over month versus the expected only down 0.1%. And that was pretty much it for Monday. The market was down, almost 0.2. But this is what it looks like, right? This is the leading economic index in black and the S&P 500 in red. And so leading economic index is basically production, U.S. production on a state-by-state basis. So all the things that go into it's for every state. So the unemployment in that state, the whether or not people are getting paid more or less, all the kind of production economic stuff that goes into it on a state-by-state basis, and they average it out to make a national number. So it makes sense that when production in the U.S. is increasing, the stock market is going up. When production is going down, the market's going down, right? So that would make intuitive sense until you get to where we've been for the past couple of years. The leading economic index has been going down since the top in the market in January 2022, and it still goes down. Like month over month, there hasn't been. I mean, maybe this little tick right there, but basically it keeps going down even though the market keeps going up. So how is it that, production in the U.S. has been declining since the beginning of 2022, and the market keeps going up? It's obviously a huge divergence, which is very unusual. And at some point, someone will explain it away, but I have no idea. Does it mean that the strength of the market, and eventually this is going to turn back around and they're going to start going in the same direction? Or is the leading economic index, telling us that eventually this is going to come down and they keep going in the same direction? There's no way to know. It's a huge divergence right now that's very strange. So that was Monday. Tuesday, Redbook. Redbook is year over year same store sales, right? So on the leading economic index is telling us that the manufacturing and part of the economy in the U.S. has been falling and continues to fall. Then you get the Redbook that says year over year same store sales is decreasing, right? S&P is down a little bit on that, but so those are two negatives. And then the 30-year rate on Wednesday stays at 6.52% for mortgage rates. Applications fell less than they did last week. Mortgage refi demand fell a little bit. So we maybe have a bottom here in the F fund or the TLT. It'll be interesting to see because it's been bonds have been falling here for a while. So yield has been going up, which is why yield is going up. So mortgage rates have actually gone up, and since last week they stayed the same. But the long bond is definitely not coming down, right? Even though the Fed has begun this rate cutting cycle. And then on Wednesday the S&P was down, 0.92%. Then the big thing for the week I think was Thursday, was Tesla's huge earnings beat. It gaps up 12% at the open and then closed the day up 22% on Thursday. We also had initial jobless claims came in less than expected, which is good, right? That's a positive, 227,000 versus 247,000. And the 4-week average didn't really go up that much, so that's a positive. And the S&P is up a little bit. And then on Friday we get, actually let me go to Tesla first. So if you took a long view of Tesla, this is what you're looking at. This is the IPO of Tesla. It's a logarithmic chart, so it kind of puts things in better perspective. So what happens is it does its IPO, consolidates for a long time, does a huge move up, consolidates for a long time, another big move up, consolidates again, huge move up, and we're in this consolidation period right now, this triangle consolidation, and it's really clear. And the next leg is almost definitely up. So that's on a long-term basis. You're putting in those trend lines and waiting for it to break out to the upside. You had a false breakout right there, another false breakout right there, and maybe this one that we got this week is going to be real. So this is what it looks like on a daily basis, right? The thing that is really interesting and that would be really frustrating if you were in Tesla, you have this huge gap down last week or the week before, right? Huge gap down. And then it went sideways, which is generally not a good sign because you had basically a double top here. You have a move down and then a gap down and then a consolidation sideways. So the idea would be you get this move down, a consolidation here, and another move down the same length as this one. And everything indicated that that's what was going to happen. On Wednesday, we closed at the bottom of the range and it was below all this. And you got I did this red line because there was no way based on, at least on this stack of technical analysis tools, that you would have predicted this, right? It was a 22% move. And all of this turn up on the buyers, the green line, and relative strength, and MACD, and stochastic, all of it happened on that day. And on the prior day, they were all going in the other direction. So there was absolutely nothing. And the fact that this low took out all of this definitely would have indicated the thing is going lower. And so one of the reasons that it had such a big up move is because there's a lot of short squeeze. There was a lot of money betting that Tesla was going to go down. And that generates short covering, which pushes prices higher. So there was a lot of money lost on that trade. There is nothing from a technical analysis perspective that would have had you buying Tesla at the end of the day on Wednesday, except you knew earnings was coming out. So if you're going to bet that it was going to be a big earnings beat, so if you did, great, awesome. But that's what it looks like. So I just wanted to kind of point out, Tesla is the biggest stock in the consumer discretionary sector. So the S&P 500 is broken up into 11 sectors, and the market didn't do very well on Thursday, but Tesla basically held the market up, and it accounted for this 3% move when the rest of the market, right, even you have a few sectors that are positive, most of them are negative. Tesla basically carried the market on Thursday. So pretty interesting. And then Friday we had Michigan Consumer Sentiment Survey. It was up a little bit versus last month, but it was up definitely versus the forecast. The low of the consumer sentiment was in July of this year. So definitely the consumer, somehow on the survey, the consumer is getting more optimistic. So even though, inflation is coming down, but prices are still really high, and somehow the consumer is getting more confident. And as of 11 o'clock on Friday, the S&P was up 0.74%. Okay, so we had this thing in the Facebook group. I think we talked about it a little while ago, but it's just let's just like dispel the myth kind of thing. This comes up in my feed all the time too. TSP participants can now purchase physical gold. Oh my gosh, it's constant. Yeah, tax and penalty free. You cannot buy gold in the TSP. You can't. There's the C, S,
so why are they lying to us, Jerry?
They want retirees basically to roll over into an IRA and use your TSP rollover to buy gold in their IRA.
Yeah, if you go by that headline, you can buy anything with your TSP then.
Yeah.
Because what they're saying, and you're getting to the point, is roll it out of the TSP and go do these things. Right. You can do anything once you roll it out of there.
Sure.
You put it in a self-directed IRA, you can buy just about anything. You can go buy a house.
Sure. Buy anything you want.
Rental properties, whatever.
That
should be. I feel like it is illegal. Like I feel like that's false advertising. Like how Facebook doesn't just crush that, but
Yeah,
whatever.
I don't know. I don't want to go down the rabbit hole of what Facebook's been launching our way recently. It's kind of unbelievable. But you cannot buy gold. You can't buy physical gold, tax and penalty free in your TSP.
Yeah, all you can. I hate using the word buy in the TSP. All you can do is put money in your TSP account and allocate it amongst 5 funds.
That's it.
That's all you can do. You're not buying anything because those are not shares of anything. They're units, right? Yep. And so, no. You cannot buy gold. You cannot buy. If you can buy gold, you can buy Bitcoin.
Yeah.
But you can't.
No.
You got to roll it out of the TSP.
And then you can do anything you want with it.
Yeah.
All right. So what actually is impacting the market here? Yield, right? Because everybody thought that when the Fed starts cutting rates, yield should go down. And that has not been happening. The dollar has been rocketing higher. So when yield goes up and the dollar goes up, stocks are supposed to go down. And that hasn't been happening. Seasonality, we were supposed to have had, from a seasonal perspective, the market was supposed to have been going down in September, October. That didn't happen. Now we're into a seasonally strong period. You got buybacks coming. You got a ton of liquidity coming into the market. And then this idea of the Trump trade that's all over the media. And the one thing that I heard last week that I thought was kind of interesting is what if it's not the Trump trade? What if it's they call it a blue wave, but the conventional wisdom is that the market likes it when the White House and Congress are separate parties, right? Because they can't screw it up too bad. They're not on the same team. So could it be the market thinks Trump's going to win and that's why it's been going up? Sure, maybe. Could it be that they think that the Republicans are going to take Congress and that would be advantageous for the market? Maybe. I mean, who knows? It's just a bunch of people pontificating about different things. The reality is the market keeps going up. And in the face of actually important things like yield and the dollar. Why is this not erasing? There we go. Okay. So if we look at yield, just for a second, this was the bottom in 2020 when the rate hiking cycle began. So the Fed starts raising rates, yield starts going up, bonds start going down, And we did it in this 1, 2, 3, 4, 5 Elliott wave pattern, and we got up to 5% on the 10-year yield. And then the idea is that this was the biggest move up in rates on a percentage basis in history ever, which is why it was the biggest move down in bonds in like the last 100 years. And so that was such a big move in that direction, and we only got this correction so far. The idea is we should be down here, somewhere at 2% to we have this move up. We should have some kind of significant correction to that, and then we start going higher. This is what economists are worried about in the long term, because that means inflation is going up in the long run. But before that happens, we should have some kind of correction, meaning inflation comes down, bonds yield comes down, and the price of the F fund goes up. But we haven't seen that, right? We've had now. It could be 1, 2, 1, 2, 3, 4, 5, right? That's one of the possibilities. Or it could be this is all the correction we get, which means if this keeps going up, inflation is going up, the Fed will stop its rate cutting cycle. Like there's all kinds of potential things on the horizon. And if you watch the show, we'll tell you about it as it's going. It's not something that I would want to do if I wasn't doing this for a living. But yield is a really important thing to watch. And the dollar is the other one. The dollar goes up. A lot of the times, the dollar goes up when there's fear, right? It's kind of a fear trade. So 2022, when everything is tanking, the dollar's going up. As we get to a bottom in stocks, the dollar starts falling. The idea right now that the dollar has exploded to the upside, and stocks are still going higher, right? So the dollar's going up, yield's going up, and stocks are going up. It's not supposed to happen that way, right? But it is. So if you were allocating your portfolio based on expectations of what happens during certain macroeconomic conditions, you'd be very, very wrong this year. So that's why a lot of analysts right now are way behind the power curve, and that's why a bunch of money is going to be coming in at the end of the year, so they're trying to catch up. And then seasonality, we were supposed to have, this is election years going back 59 years. You're supposed to have a correction in September and October. We didn't get that. We're also supposed to bottom at the end of October going into the election. You have a big run up, and then it keeps going into November, December. So we'll see if we get that. The idea is this chart is more importantly used as a timing tool than like whether or not we get this decline, we still theoretically should get this move higher. So we just have to wait and see. But again, from a seasonality perspective, we are right at the point where we should start getting big moves into the end of the year. And then liquidity, right? We put this one up last week. People think that budget deficits are bad. And depending on how you look at the world, budget deficits are bad. It's just adding to the debt. Eventually, the bill comes due and all those kinds of arguments. But the reality is when the federal government is spending money, the stock market goes up. When the government begins to slow down the amount that it spends, that's when we start having problems. And as long as the deficits continue higher, the market continues higher. It's very hard for the market to roll over when the government is pumping a ton of money into it. So there's all these reasons to expect the market to keep running higher, even in the face of rising yields and rising dollar. There's just so many things in the mix right now. If you don't have some kind of understanding about all the different things, either you don't understand why the market's going up and so you're out of it and it's going up without you, or you think that it's going to keep going up forever, which isn't going to happen either. So the Trump trade, this is DJT, right? Trump's media company. It was up here at one point intraday at almost at $80 back in April, right? And then it had a low of $12, so it lost almost 90% of its value over that time. But then in September, I don't remember what of the myriad of things that it's happened in the last couple of months happened back here at the end of September. But for whatever reason, his media company took off, and it's up, 12 to 35 is what, 4x in weeks. This is why people are saying it's the Trump trade, right? This is one of the indications that the market thinks Trump's going to win. I mean, who knows? Bitcoin is another one, though. The idea is that Trump is a big Bitcoin supporter, and if he gets in the White House, then Bitcoin takes off. I don't really care about all that, but what I do care about is we have a very clear trend line here. We got a bit of a false breakout right here, but as soon as we get up here at above 70,000, this consolidation will be over, and it goes up from there. There's so much going on. It's a cool time to be an analyst. TSP fund charts. So again, until things change, they haven't changed, right? This week, as of Thursday's close on the week, we're down, almost 1%. But Friday looks like it's going to be a pretty good day, so we'll erase some of that. But we're still, well above that 20-week moving average line. You could call it a little bit of divergence between price, which is moving higher, and relative strength, which is not moving higher along with price. But that can turn around. And with the seasonality and liquidity coming into the market, it would not surprise me that price just keeps going higher, and we do get above that 70 line, and we're back up here on relative strength. S fund, same thing, still looking good. It's more volatile, right, than the C fund. We had a huge week last week for the S fund, and we got a pullback this week. So from a percentage basis, you're like, well, we're off 2%. That's not good. But it's well within the channel, and relative strength is still good. So if we're talking about, we're not day trading the S fund. It's well within that up channel. I fund potentially breaking down. If it finds support here, again, this is Thursday's close. It's really close to that 20-week moving average line. Relative strength, you definitely have lower highs, and you're approaching that 50 line in relative strength. So we'll see what happens with the I fund, but it's still in that up channel. So certainly from a TSP perspective, there's nothing wrong with the I fund right now here either. And the F fund, again, yield is doing crazy things. I would be surprised if we go much lower on the F fund, but it's just if the F fund continues lower, it means yield continues higher. If yield continues higher, at some point the stocks can't keep going up. It becomes math after a while.
It's very difficult for that to happen.
Yeah. And that's why everybody's looking at this going, the market's going to roll over any minute now. And so I don't want to be in it when it rolls over. And I'm in the same boat. It's just that until it rolls over, it's going up. And I don't want to be out of it when it's going up, right? So that's that. And then the G fund we put up just because we can. The line looks great. You might look at this chart and go, why am I not in the G fund? Well, on a percentage basis, even though it does keep going up and to the right, on a percentage basis, you're not really making very much relative to what you could in the stock funds. So lots going on this week. If you have questions about any of that, definitely hit us up.
Yeah, if you have questions, just put them in the comment section wherever you find the video. If there's no comment section, you can shoot us an email at growmytsp.com. At support@growmytsp.com. That's the important part.
Yeah.
Anyway, and our support team will get it over to us. I hope you guys like the show. If you do, please share it with your friends. And have a great week out there.
There you go.
Let's do it.